everyone. Thank you for joining us today. My name is Jeffrey Infante with Real Estate Talk Today, and today I have my partners here, Josh DeBrossard and Jenny Clement, and today we have a special guest for you guys, Eric Maluk. Thank you, Eric, for joining us today from Semper Home Loans, right?
Yes, thank you for having me.
Eric, as always, we like to have you introduce yourself so the audience can understand who you are and what you do. And go ahead.
Eric Maluk, Semper Home Loans. I'm a branch manager for our Warwick location. I've been in the business about 18 years. Started out as a loan officer. I owned my own company for about 12 years. And I've been with Semper now for about 3 years. And just, probably helped a couple thousand families over my time doing this.
Awesome.
Nice.
Eric, so, I mean, we always get this question, right? How's the real estate market, right?
Yeah.
That's the question I always ask. And, it never gets old because the market is so ever changing, right? And in a fast pace, right? So many things happening all at once, right? So for those that are listening, we want to elaborate a little bit on that. Give us a little update of what the market is doing right now in the real estate and mortgages.
Yeah, so what I'm seeing a lot of lately is you see a lot of people who are affected by the pandemic, had to do a forbearance, especially multifamily homeowners where they weren't getting rent. Now all of a sudden we're coming out the other side of this. However, these bills are now due, and a lot of the banks are starting to reach out, and clients don't have that money to bring their mortgage current from all the forbearance because they weren't getting rent or they were displaced at work, things of that nature. So now they need to figure out what they're going to do to keep their house or what their plan's going to be going forward.
Oh, so either they have a choice to either sell or do what, a modification?
So to put the forbearance money on the back end of the mortgage, they actually have to go through a process with their mortgage holder, and they have to do a modification to move those funds to the rear. Because when they started their mortgage, they agreed to have the mortgage for a certain period of time based on a certain amount of payments being made over that time. So they basically extending it. Wow. So they have to go through the process.
But I'm confused, Eric. So there's two things: the modification, and then the banks are saying that instead of paying that lump sum, you could just put it in back of the loan, but that's not called a modification, is it?
It's a form of a modification because you're changing the original terms of the mortgage that they took out.
Okay.
So it's a modification.
Okay.
Now, Eric, is this affecting like their FICO score? Because that's another question that, and I can go into this a little later. I had a client particularly that went through a situation like this, and so the people that are now listening to this that are in the forbearance process or have done it, or the question is, does my credit get affected now?
It can definitely be affected. So anytime you do any type of modification or even the forbearance, we see those actually report on the credit report. That they're currently in forbearance, or if you do a modification, it's going to say loan was modified. And God forbid, if they don't get the modification done in time and they were supposed to be back in repayment, they could actually have a late on their mortgage.
So what can delay a modification in your experience?
It's usually the bank's requirements of certain paperwork to process the modification. And, people are back to work. People are, kids are back to doing sports. Right. We're all back to having a busy life. And not everybody has a scanner, a computer, everything at home ready to do this. Right. So there could definitely be some delays.
It's very interesting.
So what are the solutions or advice that, you tell these people that because they've been affected with a pandemic and now they can't repay, what will you say? So
we all know, obviously, the market's been very good. We've seen houses appreciating year over year. So most of these people are in a good situation from an equity standpoint. They have more equity than they owe on the mortgage and the forbearance. So a possible solution for a lot of people would be to contact you guys as realtors and say, I'm just going to sell my house, I'm going to pay off my forbearance, pay off my mortgage, and get a lump sum of equity that I've earned, and I could just go look at buying a new house and have a fresh start, have zero impact on my credit. So otherwise, they have to go through the process of the modification.
And by them doing that, they're going to be able to qualify to buy another property.
Yeah, as long as the other factors of their credit and income substantiate a new loan. This is actually the best way because the equity in the house is their money. So they're actually using their funds to pay off their mortgage, pay off their forbearance. So they're actually going to be in a good position from a credit standpoint.
Yeah, I had a client that just went through this experience last month, as a matter of fact. You know, he called me up. He says he wants to sell his house. I didn't know what was going on until I dug in deeper. And I guess he was a little embarrassed to say, which is, it's fine. And then he told me what was going on. And he was at the process of getting foreclosed on because they wanted, I think it was over $25,000 in backed up old money that he had to come up with, and they wanted it all in full. He was trying to negotiate, like, to see if they could do like a payment plan, like installments. They said, nope, we want it paid in full. Or if not, we're setting a foreclosure on the property. So luckily, we got it sold. He ended up walking away with a good chunk, and now he's gonna, reinvest back on the market. Luckily, his credit wasn't highly impacted, but it took a little hit, but not as bad as it, some people may go down to. So.
That sounds like the exact situation we just talked about.
Right.
Luckily, you were able to get there in time
Right.
to do it before the credit was impacted.
Right.
Wow, and it's pretty serious. I mean, if anyone finds themselves in this situation, I really do think you should reach out to your bank. And if your bank's not willing to work with you, like your client's situation, definitely reach out to a realtor. Like one of us, we work with all types of buyers and investors that if, let's say, your home's in certain condition, you want to sell it, no hassles, cash as is, we can make that happen for
Right,
sure.
right.
We can make that happen.
Right.
And I like to always say, bad things happen to good people. And so we get it. It's the nature of things, especially COVID was unexpected for all of us. And if you are in this situation, we all just suggest or recommend reach out, guys, seriously, because we don't want to see anybody hurting.
Right.
Now, from the loans that you service, Eric, I mean, do you guys get like some type of notification of these people? Like, and again, it goes for like all across the board. Does these mortgage companies get like some type of notification, like, hey, this client is going to go into foreclosure or forbearance? Do you get like any notices to see if you guys can
We
reach
don't
out?
get any notifications. So most loans obviously are serviced by the big banks, the Wells Fargos, Bank of Americas, and so on, and they're going to try to work with the client where they can. Just a lot of people, it's been a long time. Some people have been in forbearance 2 years.
Wow.
So just take your mortgage payment and multiply it by 24 months. That's how much money didn't go into the bank. And I think a lot of people don't realize there's a good portion of your mortgage payment that doesn't go to the bank. You have taxes, you have insurance. Most people include those in their payment.
Right.
So while you haven't been making your payment for the mortgage company could say, all right, we're going to take our 24 months of what you owe us and move it to the back.
Yeah.
But 2 years of taxes, 2 years of home insurance, the bank's been paying this on their behalf, so they actually went even further backward.
Wow.
And now that you mentioned that, I had a client that they were able to put the payment in the back of the loan, and then he was gonna start making the payment, but now his payment went higher, and then he called and he's like, why is my payment higher now? And they said, because of the taxes. Now you have to pay that taxes.
Yeah, because that's not
And the
something
insurance
the
that
bank
he
was,
wasn't paying.
that's something that the bank
That they
can
paid.
forgive
Right.
or put in the back really, because the city and the municipality, they expect their taxes quarterly or annually. Insurance, we all know we have to pay that annually, so if anything happens to our property, it's protected.
Right.
Those items still have to be paid. The bank, I mean, I understand their side of it. They're like, hey, we can't go 15,000 backward of stuff that had nothing to do with us. The
Yeah.
interest that they were due, they can wait for that.
Right.
But other things they had to advance.
And now because that payment is higher, now that client still can afford it.
Yeah, and a lot of people, I mean, we all know somebody in this pandemic that lost their job.
Yeah.
It wasn't just a temporary unemployment. They completely lost their way to make a living.
Right.
Maybe they found a new way to make a living. It might not have been as profitable
Right.
as prior, and now a higher payment is going to put them in even more distress, and potentially over time they could fall behind again.
Right.
Yes.
Yeah.
Right. You had made a comment earlier before we start recording and going live on air, and I want you to repeat it again because it's important, I think, for the public to hear, because if they are in this situation, which we predict is going to happen to many people, when they start ringing the phones to the bank, and it's busy, I want them to know that there's other alternatives like reaching out to a realtor as well. But what was the example you gave about '08?
So we were talking, the last time we had a mortgage crisis.
Yes.
In 2008, a lot of people had adjustable rate mortgages, and they adjusted, and they were trying to do modifications. What happens is when so many people are in the same boat, there's only so much the bank can service. People were literally calling up in 2008, and the phone was busy, or they were on hold for an hour, and they got frustrated, and then they just couldn't follow through with getting the modification. And once you get so far behind, people start giving up hope. And if enough people who are in forbearance all of a sudden have to do a modification or figure out a solution, the same thing could start happening. You call your bank, and they're just over inundated, and it's not their fault. There's just too many people calling. So that's why I'm really pushing a good opportunity right now is to talk to you guys as realtors. There's equity in these properties. Don't lose that equity.
Especially before they go into the foreclosure.
Yeah.
Right. Right.
And you know why it's a great idea to just talk to a realtor directly is because I know where Eric lives. So if he's not answering his phone at the office, I'm going to go straight to his house and get the job done for you.
You know what I feel like a lot of individuals, I think they're a little embarrassed sometimes to reach out to someone.
Yeah.
And we're here to say that don't be embarrassed, right? We're here to help you out, and we can all relate to that. So, if you guys are facing any situations that we just spoke about, reach out to us. We're here to listen to you guys, and that's your personal situation, and we keep that very confidential. So, we're here to help you and guide you and give you the right tools necessary so you guys can, get out of the situation that they're in. So, but I wanted to mention that clearly because, my client, he didn't tell me. He felt very he didn't want to tell me because he felt maybe I would have thought differently of him. I said, no, man, we're here to help you out. This is what we're here to do. This is your livelihood, Don't just stay shut. Reach out to someone and see. And he reached out and we got him a good offer for his property. He walked away with over $100K and, which was awesome, know. And if he would have stayed shut, gone for close, who knows what would have happened, right?
Can I ask one more question to you,
Sure.
Eric? Let's say if there's a property that just has no equity for whatever reason, what are the options there?
Yeah, so again, as long as they haven't had an adverse effect on their credit or income, perfect opportunity where if you can at least get them to break even, and now they don't have money for a new house. We don't want, obviously all of our goals in this business is to help people achieve home ownership.
Right.
Right now we're trying to help them maintain home ownership. So at Semper Home Loans, we actually just launched a program. It's called the Home Easy 100. We can do 100% financing on single family and 2 units, even if they're not a first-time home buyer.
Wow.
So if we're able to help them sell the house before they have an adverse effect from the forbearance, sell the house, and we can help them get approved for a new house, 100% financing, even though they just owned another property.
Wow.
Owner occupied?
Yes, of course.
See, that's great, and I'm glad you mentioned that because people don't know about this stuff right there, right? So they're able to get out, cut even, and then buy another property at 100% financing.
That's good.
That's amazing.
The most important thing is to maintain home ownership. We always try to help people achieve home ownership, but we've got to help them maintain it also.
Right.
Awesome. Wow. Well, Eric, I don't know if you guys have any other questions.
No, that's
right
great
now.
information.
This is
Oh,
great.
thank you.
Yeah, wanted to
Thank
keep
you.
it nice and short and right to the point, which I think was great.
Yes.
Eric, thank you very much for joining us today. It was a pleasure having you, and looking to have you again.
Thank you guys for having me. I
Thank you,
appreciate it.
Eric.
Take care.
Thanks,
Thank
Eric.
you.
All right. Well, guys, thank you very much for joining us today. Again, my name is Jeff Infante, Josh DeBrossard, and Jenny Clements with Real Estate Talk Today. On to the next. Take care. Bye-bye.
Bye-bye.
Ciao.